Hey guys, welcome to another video. Thanks for joining me. And in this video, I'll be talking about the General Electric company. If you're familiar with General Electric, you know that this is a company that has existed for a very long time. They have businesses in the aviation industry, they have businesses in the home appliance sector, they have businesses in the medical sector, and so much more. They have been able to streamline that process now, and they've been able to actually focus on their strengths to hopefully make improvements in the long term. But the issue right now is that they have fallen behind. They've experienced a lot of losses and they have a lot of debt as well. So let's go over into the details real quickly here that I'll be sharing with you through my screen, and then we'll be able to see how we can go from here. Looking at the balance sheet of General Electric, one of the things I would see right away is that they have been able to actually start cutting back on their debt. If we look at the Q2 of 2019, for example, it was 276 million. Q3 of 2019, it went down to 235. Q4, it went up a little bit, but then by Q1 of 2020, it's down to 226. That is a lot of improvement, compared to what it used to be. The other thing is that the total debt right now is from Q2 of 2019 went from 105 down to Q1 of 2020, and it's down to about 85 million. So the point is that you can see that they are trending in the right direction. All right, they're trending in the right direction. Now that is very important, because if you're looking for a company, you don't want to catch the company when it is performing well, because when it starts to perform well, that is reflected in the stock performance. If you look at Apple, Amazon, Microsoft, all these big companies and IT tech companies, they are performing well, and you can already see that in their stock prices, and that's why their stock prices are higher. But GE has performed so poorly that their stock price is down, and now this is the time to start tracking this company and start keeping an eye on it, because over time, if this continues, this may be something that you want to get into early so that you can actually ride the climb out. The next thing I always try to look at is the total equity. If we go down to total equity, we'd see that from Q2 of 2019, they were at 35 million. It went down to Q3, went slightly up in Q4 of 2019, but through Q1 of 2020, it's back up to about 35 million. And that is telling us that, hey, something is being done right. Something is being done right. And that is a key thing here. Now, one of the things that they've done, obviously, is to get rid of their pharmaceutical company. And that has created a lot of cash flow for them. All right. But let's move on to the next thing that I'd like to look at, the income statement. Obviously, any company that is going to be profitable needs to keep its expenses under control. If you look at the expenses of 2019, we would see that through Q2 and Q4, it was 28, 23, 24, and then Q1 of 2020, it's down to 19 million. And again, that means they're keeping their expenses under control. Again, one of the things that is really reflected in these numbers is the fact that they are cutting off industries that are just costing them so much money, but not bringing returns. So by eliminating some of those industries, they are able to focus on their strengths and hopefully grow from there. The next thing I like to look at is income taxes, preferably the income after tax. And if you notice in Q2 of 2019, it was a loss. Q3, it went up a lot more, which was a loss as well. But then by Q4, they had a profit. And then by Q1 of 2020, they made a lot of profit as well. But you got to remember that as a business, you can always offset some of your taxes through the previous losses. So that could have been reflected in these numbers, but the point is that the numbers are growing, and that is what we want to see. It's not, the losses are not increasing. Now, the next important thing is the net income, all right? Let's look at the net income real quickly. So for Q2 was 128, and then by Q3 of 2019, it was a major loss. By Q4, it increased, and then by Q1 of 2020, they made a lot of income there. Again, they could have offset some of their losses in the past, which is then reflected in the current numbers. So although it is good that is a lot positive, but let's see what happens by the end of Q2 of 2020. Now, the last one is the cash flow. Obviously, we know that for any business to survive, they need that cash flow. There needs to be money coming in and money going out some way, and the more money they can keep is a good thing. The total cash from investing, as you can see, that number has also steadily went up. That is good because remember, now they're focusing on their strengths and investing in what they know how to do well. Now, one of the reasons why I believe in General Electric, or why I believe that they will do well in the long term, is that they have so many diversified businesses, and these businesses have been doing well for the long term, especially the aviation industry. Although the aviation industry right now isn't performing as well as we would all like, but the point is, it's going to recover and things will pick up again. And General Electric will benefit from that. However, they also work with the military side as well. So in the aviation sector of the military side, they actually supply them with engines and systems and just the technology part of it as well. One of the things that they reported in April was that they got awarded $707 million for the F-110 engine because they have their network and they have their expertise in this type of industry that is very niche and very concentrated to just very small companies. General Electric has the experience, they have the technology, they have the resources to get the job done. Now, is $6.42 a good buy? That is a question that I cannot really answer because here's the thing. What I believe is that if this stock is going to go lower than this, maybe to $5 or $4 or $3, maybe $2, becomes almost a penny stock. The point is, things must be really bad. Now, the next Q2 report that should be coming out in, I believe, July, August or so, this report will really tell us what is happening again in GE. But by that time, I believe the stock price would have gone higher. Now, how high would it have gone? I don't know. Because, like I said, the numbers are showing that they're doing something right, which means if they keep doing what they're doing, they should perform well. The only thing that is outside of our control right now is the pandemic and how this may affect their performance. I believe that if you're going to buy GE, this might be the best time to actually get in, because if things stay the way it is right now and hopefully starts to even improve, GE will pick up again. Now, how high is it going to go? I cannot really give you a price target. Well, that's it for me, guys. If you guys have any suggestions or if you have any ideas that you may think I'm missing, please share in the comment section below. I'm not an expert. I'm just a regular guy like, I would guess like you or like some other person out there that is just trying to make wise decisions and find good, decent companies that will be able to return value to us. So if you find value in this video, please give this video a thumbs up. And also, if you haven't subscribed to my channel, please consider subscribing to the channel because it will help.